you have credit card debt, but you're like, well, I have credit card debt, or you may have some type of debt, and you actually can use credit cards to help you reduce your debt or pay it off faster. And one of those ways is to use the credit cards that are offering the 0% introductory offer. A lot of times they might give you that 0% for balance transfers for 12 months or 18 months, and so if you can get a card that has a 0% introductory rate and for balance transfers, then you can open up that card and transfer the balance of your credit cards to that card, and then be able to just pay on the principal of whatever you transferred over with no interest for that introductory time period of 12 months or 18 months. And that's going to save you a whole lot on interest. Welcome to another episode of Becoming with Angelina Watkins, and I'm your host, Angelina, your queen of becoming, here to help you achieve emotional, spiritual, and financial prosperity. And in today's episode, we're going to talk about credit card debt. Credit card debt is high, and to be exact, in America, credit card debt is about $986 billion. But it ain't all bad, okay? Using credit and having credit cards is not the end of the world. So in today's episode, we're going to talk a little bit about credit cards and how to use them wisely, how to use them to boost your credit score, and how to be able to avoid paying interest on those credit cards. But we can't talk about credit cards without talking about your credit score. You need to know that your credit score is all about borrowing and paying back. It's like the grade you get if in passing the test of whether or not you understand and rightly use borrowing and paying back money. And so creditors who are in the business of lending, they're going to use your credit score. They're going to look at your grade, and they're going to determine from your grade whether or not they should trust you to pay back the money that you're asking them to loan you. And so that's all that is, right? We borrow money because we need it for whatever reason. We want to buy a house, we want to buy a car, I don't know, we want to take a trip, we want to use the credit card for an emergency fund, but we've got this credit card. And if I give you this credit card, if I give you this loan, the bank wants to know, the lender wants to know, whoever is giving you the money wants to know, are you going to pay me back? Because I ain't got time to be calling you because you ain't paying me back, okay? I don't want to have to hire all these collection agents to be hounding you because you don't want to pay your money back. So the credit score is just your grade of whether or not you've passed this test of how you wisely use the credit and the money that they've given you. Do you pay it back on time? Do you pay it do you keep it low? Or are you just maxing out and spending? They want to know these things. And so that's what your credit score is. It's your grade. And you can have an excellent grade, a good grade, a fair grade, or a horrible grade. It's up to you. But we're going to get into that. We're going to talk how to wisely use your credit cards, okay, in order to boost your credit so that you can get more lending, and how to be able to avoid paying all that interest on them credit cards as well. Now, before we do that, I do want to welcome you to the show. Thank you so much for joining us. If you are new to the show, I started this podcast because I wanted to be able to help you become who you need to be so you can do what you're purposed to do, so you can live the abundant life that you want to live. And we talk about all types of topics, from relationships, money, business, life, anything that we can in order to help you become a better version of yourself so you can get in a position to win at love, life, and money. Now, don't forget to hit that subscribe button and that notification bell, because you do not want to miss another episode. I drop an episode here every Thursday to help you drop the knowledge, okay? So make sure you do that. Make sure you subscribe. And if you enjoy the show, let me know how you enjoy it. If you have comments, make sure that you leave me some comments below. And then before we get into the show, let's not forget about my book, Path to Prosperity, 17 Secrets to Building Wealth That You Can Start Today. And it's going to help you all if it helps you build your wealth when you don't come from anything. How to build it from scratch. Because let's face it, a lot of us were not born with a silver spoon in our mouth, and we weren't afforded the money and the status and the name to be able to just go out here and get whatever we want, whenever we want, however we want, to be able to just get credit based upon who our father or our mother was, or who our family was. And so we have to be able to build these things ourselves, and it is possible. And I put all the secrets in the book, so don't forget to get that. The link is in the description below, so click on it, get your book, and let's start building wealth today. Now, my book is a great segue into today's topic of talking about credit cards and how to utilize your credit, because we do talk about those types of things in the book, about how to get out of debt and how to spend your money correctly, how to build that wealth. But today we're going to specifically talk around credit cards. Because that's, other than like mortgage loans and car loans, credit cards is the biggest way in which people borrow money. And so I want to talk to you first about how to use credit cards to get out of debt, because you can. There's a method to the madness of credit cards. And so you have credit card debt, but you're like, well, I have credit card debt, or you may have some type of debt, and you actually can use credit cards to help you reduce your debt or pay it off faster. And one of those ways is to use the credit cards that are offering the 0% introductory offer. A lot of times they might give you that 0% for balance transfers for 12 months or 18 months. And so if you can get a card that has a 0% introductory rate and for balance transfers, then you can open up that card and transfer the balance of your credit cards to that card, and then be able to just pay on the principal of whatever you transferred over with no interest for that introductory time period of 12 months or 18 months. And that's going to save you a whole lot on interest. Okay, a whole lot on interest in using 0%. So that is one way to use your credit cards to help you get out of debt. But now you got to remember that at some point in time, that introductory offer is going to end. Okay, and the rate is going to go to the normal rate. So you have to pay attention to what is that rate on that credit card once that introductory period is over. How high is it? How much can I get paid off before the rate goes up? And will I need to maybe do another balance transfer in order to continue to do the 0% interest? Now, I'm not recommending that. Please do not listen to this and say, she told me to go open up a credit card, and when I'm done with that one, move it over to another credit. I'm not going to sit here and tell you to keep opening up a bunch of credit cards. But what I am saying is that is available to you if you want to be able to do that. And then you might want to consider doing a personal loan, because actually, honestly, you might get the 0% interest. But at some point, you might want to look into consolidating using a personal loan, because the interest you get on a personal loan is going to be less than a credit card. And so that's another way to be able to pay your debt off faster, is always by lowering the rate. So now we've lowered it by maybe getting a 0% interest card, or transferring your balance to a card with a lower interest rate, but then getting a personal loan to consolidate your debt and have an even lower rate. The whole point is we want to reduce the interest that we're paying on the debt. And the only way you're going to reduce the interest paid on the debt is to get a lower interest rate through 0% interest, a lower interest credit card, or my best recommendation, which is a personal loan if you can qualify. All right, now let's talk about using credit cards to build your credit score. Okay, it's all about credit utilization, and credit utilization is based upon how much have you borrowed versus how much is your total credit limits. So let's just say that you have 5 cards, and each card, I'm gonna use even numbers. Each card has a $10,000 limit, and that will give you a $50,000 credit limit across all of your cards. Now let's say that you owe $2,000 on each card. That means that you have $10,000 and outstanding debt. So credit utilization is the percentage of outstanding debt versus your credit limit. So in this scenario, you have 10,000 outstanding, 50,000 credit limit. That would give you a 20% credit utilization rate, because you take the 10,000 divided by the 50,000, and then you get the 20% percentage. A good credit utilization is under 30%. You want to keep your credit utilization under 30%, and that will help you keep your score rising. However, that's only if you're paying on time. Okay, we don't want to just say, oh, well, I'm under 30, I should have a good score. No, you still got to pay your bills on time, okay? You still got to pay that monthly payment and show that you're doing regular payments, because that's what helps you get the passing grade. But we want to keep our utilization under 30. But what if my utilization is higher than 30? How can I get my utilization under 30 to help boost my score? One way is to pay down the debt. I mean, that's obvious. If your utilization is 50%, well, then you need to get it and pay off more debt to get it under the 30%. Another way is to you can open credit cards with zero balance, or you can open up credit cards to increase your limit. So that will change your and reduce your utilization rate. But when you open up that credit card, that doesn't mean use it, because then we just want the credit limit to boost your credit, your total credit limit. So that will bring down your utilization rate. Another way is keep open credit cards that have zero balances. Sometimes we got credit cards, we're not using them, and we think that we should close them, and it's not always a good idea to close the card, because once you close that card, it reduces your total credit limit, and then that will impact your utilization rate. So make sure that we have some credit cards that have 0% and that we leave them open in order to help increase our total limit, so that it decreases the credit utilization. Another way is to increase your credit limit on your existing cards. If you can qualify, you can go to your creditor and ask them if they can increase your limit. And so in increasing your limit, it will then decrease your credit utilization. And sometimes if you're doing really well, if you are paying your card on time, or you're paying it off on a monthly basis, they'll just automatically raise it for you. So increasing what you already have will also help you with your credit utilization. Okay, but of course, that is if you qualify. You have to qualify. If you already have a lot of credit card debt, your utilization is high, your credit score is low, you may not qualify for new cards, and you may not qualify for an increase. So at that point, the only thing you could do is keep open any existing cards with zero balances and try to pay as much as you can off as quickly as you can to get under the 30%. Now, before I head out of here, I began to talk about all of this because I had a viewer question. And the question was how to utilize a credit card without being charged interest. That's what they wanted to know. What can you do to save on interest on your credit cards? How can I not pay interest on my credit cards? Well, I already gave you one way earlier when I said to utilize the 0% introductory offer on credit cards, where you can do a balance transfer and then you're not paying any interest for whatever it is, whether it's 12 months, 18 months, 24 months, whatever that introductory rate is. That is one way to not pay interest on a credit card. The only other way to not pay interest on a credit card is to pay your balance off in full. Pay your balance off in full. Don't use the credit card unless you have the money to pay the bill. Now, I know we got a lot of cards out there that offer us rewards if you utilize the card. And the rewards is to encourage you to use the credit. But one thing I will tell you is that use the card to get the rewards, but make sure that whatever you're buying, you have the cash to go ahead and pay the card off. You don't want to get in the habit of using this card and then keep carrying over your balance, because whatever balances that you carry over and that you do not pay off, you're going to keep accruing interest on that balance. And so you want to be able to pay things off in full. Okay, so rule of thumb, if you do not have the cash to pay the credit card at that time that you're making the purchase or within the week, don't buy it, don't use it, because otherwise you're going to not be able to pay it off and you're going to be charged interest. There's no way other around it. The only way to not pay interest is to pay it off in full. Okay? Now, I hope you've gotten something out of this. I hope this was helpful for you and being able to think about how you can properly use credit cards to get what you want, but also to boost your credit score so that you can get what you want. Okay? Now, where you are is not where you have to be. Your past does not define you. You define you. So heal, transform, and pursue.